Hey everybody, today we're doing an open house right here at 5380 Whale Street in Mississauga. I'm here with my good friend and an excellent mortgage advisor, Jen Behel. Jen, you want to say hi to everybody?
Hi everyone.
All right, so we're going to be here for the next hour or so. We're going to try to do this Instagram Live where we're going to talk about the house itself and also get into details about financing a luxury property. Because I think talking to you, I realized that financing for luxury is not the same as financing like a regular property, say under 1.5 mil.
No, definitely not. It's a different ball game altogether. Financing requirements change as soon as we hit the $2 million mark, and different lenders have different policies. So for example, with the house that we are standing in,
Yeah.
this is listed for close to $3 million.
Yes, 2.9, yeah.
So the minimum requirement for a house like this would be about 850 grand, which is
Wow. We'll get into nitty gritty of all these things in a moment. But I'm just thinking that most people, they believe that as soon as you hit that 1.5 and you want to buy anything above that, it's only 20% down. You're saying that's not true,
That's not true.
guys. Okay. That was something new that you learned. I mean, I knew about that, some sort of a limitation above the 2 million mark, because I've had clients who had to deal with that. But now to learn that as soon as you cross, what is it, 1 point?
Well, $2 million
Yeah.
and round about that, and the restrictions or limitations also differ from city to city.
All right.
So the same house you may be able to get financing for 80% within the city of Toronto.
Okay.
But as you move further into GTA, let's say Mississauga, where we are in,
Yeah.
the requirements change.
Okay, so let's do this. Let's just take this house as an example. And I've got a couple of clients that are interested in properties in this price range. So let's start with that. So I've got a client that are eyeing, say, by $3 million property in Mississauga, similar to this home. And the last home they purchased was 5 years ago at 1.5 mil. So what's the biggest shock they should prepare for coming to, say, from 1.5 to $3 million now?
Oh, the biggest shock obviously is the down payment. Not everyone has almost $1 million saved up in their bank account.
I don't.
So it totally depends, right? If they have that kind of money, obviously their monthly mortgage goes up. But like I said, the biggest shock is the initial down payment, and the closing costs also climb up when you hit a $3 million mark.
Of course, now you mentioned that for a $3 million home like this, your down payment is about 27.5%, which was 850K, right? So you're saying that we can't get away with 20% like we've done for all our friends in Whitby, Oshawa, and Woodbridge areas.
No, unfortunately not.
Okay. All right. I mean, I thought it's going to be fairly easy, straightforward moving into that. You know what I did? Actually, I wrote some questions down because I know I'll forget all this, right? So speaking of financial commitment, I know you're going to do a large down payment. What kind of a financial commitment outside of that we're talking about? I mean, what kind of household income do you need for a $3 million home? Would 300K be okay for that? Would they qualify that?
It depends. We actually have to run the numbers. A lot of it depends on the going interest rate as well. But just talking about the situation of your clients, I guess for a $3 million property, if you're putting $1 million down,
Yeah.
you're looking at a household income of minimum of 350,
350.
and higher. Yeah.
But you're saying that also,
350,000
I guess it also depends on other factors such as the credit rating as well. Credit scores come into play, obviously, right?
Of course.
And what other kind of funds you have sitting on the side as well. That all comes into play.
Of course.
Now, I noticed that most of the buyers that I deal with at this price point turn out to be business owners.
Mm-hmm.
Okay. I guess it kind of become hard to afford a home like this on the salary, I guess, right?
100%.
So now if you're coming in as a business owner, your documents and your supporting docs are not as straightforward as somebody with a job. I mean, somebody with a job just has a job letter or pay stubs and credit report. Whereas a business owner with their planning on the way how they handle their income versus expenses, does that change things if you're trying to buy this as a business owner?
100%. Business. So actually, this kind of house, most business owners would only go ahead and buy this,
Okay.
or anyone with a very high salary or income as well. But lenders have specific programs for business owners, and the documentation changes for business owners as well. We look at not just their personal incomes, we also look at things like their business financials,
Yeah.
retained earnings, and obviously if they have any investment saved up.
Well, that's good. That's a bit of a relief hearing that they don't just look at the income portion only. They look at a wide variety of documents. Obviously, they understand as well the business owners do their official income is quite a bit different due to their smart tax planning, I guess, right?
Right.
Now let's come back to this home for a second. This home itself is like quite stunning. You've seen it. We've been through the main floor, upper and the lower floor as well, right? But it is also quite unique.
Yeah.
They've spent tons and tons of money renovating this home since 2018. I mean, they actually added a new bedroom on the second floor as well to go along with the rest of the upgrades they did outside, right? So based on the improvements and conditions of this home, upgrades in this home, do the appraisal requirements change from the bank perspective?
Absolutely. Appraisal is a very, very critical aspect of the mortgage application on a house like this.
Yeah.
We don't really have immediate comparables in the neighborhood that would, that the appraiser can come and compare them to and just give you a standard, answer.
Of course, because it's so unique, right?
So unique.
Every house over is so unique and so different from each other.
Yeah, absolutely. That's why appraisal becomes very, very important. And the thing with a house this big and this expensive is also that the appraisal may come in short because it becomes very subjective. So something that you may, the owners may have spent about 50 grand to upgrade.
Yeah.
The appraisal may not attach that kind of a value to it.
Okay. Well, first of all, they'll spend way more than 50 grand here, as you can sell that all the nice upgrades here, right? But again, if there's a shortfall, there'll be the buyer who'll be covering that.
That's correct.
Right? And it's a conversation you better have, all the realtors out there, this is a conversation you must have with your clients upfront, especially in the current market where the valuation does not always align with the sale price of the home or the purchase price of the home. And there could be a bit of a shortfall. Your clients must be ready to cover that because the banks will not.
As you enter the luxury market, 2 million plus becomes an exclusive, club sort of an area.
Yeah.
It's not a standard mortgage. It is a tailored mortgage. Everything is tailored. You are entering a custom house, so you'll most likely get a custom mortgage as well.
Custom mortgages. Man, that sounds fancy and stuff. I mean, I know it's just custom mortgage, but I'm sure it's way different than the custom European kitchen that we have over here, right?
For sure.
It requires a lot more. There's a lot more behind the scenes kind of thing that happen to create the custom mortgage.
I mean, the mortgage is fairly standard as such, but the underwriting is more strict. So they want to understand where the funds are coming from because, like we discussed earlier, no one has $1 million lying around in their bank account.
Yeah.
So they want to understand where the funds are coming from, and especially with the anti-money laundering laws becoming stricter over the last few years. We need to be very, very thorough with the paperwork. We need to understand the income, the investments, and if it's a business owner, then the business statements, business financials, etc. Everything needs to be in order to get everything done. And one more thing. Yeah. So this is not a standard 5-day financing condition you go in with on a house like this.
So how would you purchase a home like this under the 5-day condition?
No. So for a house like this, you need to have at least 7 to 14 days because, like I said, the underwriting is stricter. Yeah. Lenders want more time to review the application and then give you financing.
So it takes a bit longer than a traditional home, I guess, right?
In most cases, yes.
Because that's coming back to your custom mortgages, I guess, right? It requires an extra care. So, I mean, how about the down payment source? Like my clients, most of them want to sell their home before and plus use some of their home savings to purchase the next home. How strict are the banks about the income sources when it comes to buying a luxury property?
So, as long as we are able to showcase the money where it's coming from, the down payment. So, in this situation, you are saying that your clients are looking to sell first and then buy. Need to have the...
Let me interrupt you there. Not always. There could be situations where they like the home so much they want to buy it right away. They don't want to lose out on the home before they even sell their home. So I guess that could also bring up the situation with the bridge financing. Yep. How would that work for a luxury home like this about $3 million?
See, bridge financing is fairly standard. Okay. It's most lenders offer that option, but it's not the actual financing that is challenging. It's getting the approval, getting the documentation first in place, which takes more time. And like I said, underwriting takes a lot more time. So we need to be very careful with those timelines.
So I guess to be diligent, what you can do is even before the home purchase, the home buyers must have all their documents aligned properly. Have all the ducks in a row when it comes to documents, I guess, right? Yeah. And so that you save that time, whatever the time it takes to get that done, like a day or two or a week or whatnot, right? All right, this is all good stuff, guys. Hopefully you guys are getting some value out of listening to me and Jen talk about these kind of things. And you can take this info to help your clients that are shopping in the luxury segment. I've got a couple more questions for you. Now, I do remember you mentioning that part of their application review is a lifestyle review. Now that sounds so fancy and official, but what is a lifestyle review as part of the mortgage application?
Yeah, so basically, what the lenders want to understand is you're getting into a $2 million mortgage, right?
Yeah.
Can you actually afford it? Are you diligent with your money? Because you can borrow $2 million, it's going to cost you over 10 grand a month.
Of course. Yeah.
So that's what the lenders want to understand. That's why the underwriting takes more time.
Okay.
That's why they want to understand the source of funds, and that's why, and at the end of the day, the bank is lending you money. They want to be serious with that. They don't want to lose that kind of money.
So you're saying they don't want you, buying like 5-10 cars right away as soon just before the mortgage approval process, or they don't want you to take out, I don't know, $1 million loan for some personal use just when you try to get your finance approved for a home, I guess, right?
Yes.
Guys, lifestyle is important. I know we talk about all these luxury homes and people coming in here are high net worth individuals to begin with, but still, banks are a lot more diligent when they're trying to lend this kind of money out to anybody. Regardless of their personal financial situation, banks do want to review every document diligently and make sure you're not just going to go blow their money, I guess, right?
I mean, you have all the right to splurge if you have that money, but if you're borrowing money, banks are going to be strict.
Perfect. All right, guys, this has been a great conversation. I mean, we know most things about financing as a real training business because we deal with so many clients in different situations, right? But it's good to learn something about this luxury segment of the financing for luxury. It can be a bit more challenging, can take a bit longer to get done, and you might have to come up with some sort of a custom solutions. But there's not a one-fit-all kind of a solution out there that applies to everybody, I guess.
Yes. As we enter this space, the lender pool also shrinks. Not every bank or every alternate lender has these options. So, like we were talking about a custom solution, since our lender pool shrinks, they are stricter, but we do have options, and as long as we satisfy their criteria, they are happy to lend you the money.
So what you're saying is just like a luxury home, when you climb up in value, like say $3, $4, $5, $10 million, there's a smaller pool of buyers who get into these homes. So you're saying that for financing is the same for luxury homes.
Right.
As you go up in value, the pool of lenders kind of shrinks as well. All right, something else that's new and hopefully useful to all you guys as well. Now, like I said, this has been a great conversation. We learned a lot of nice things, a lot of good things, a lot of useful things from here. But what's your biggest piece of advice for luxury home buyers? If you had to share like one last tip with them, what would you say?
I would say don't buy a luxury home on a whim. Do the finances first. Get your documents in order. Talk to a mortgage agent first, and then only start looking out.
Oh, that's great sound advice. I mean, there are people that could buy this on a whim as well, but I know vast majority of clients that I deal with, or even myself personally and yourself, we can't do that, right?
We can't do that.
So you got to be careful of how we approach this purchase of a luxury home. I guess you got to be financially stable. You got to have all the documentation the banks need, and you got to show a lot of patience with the process as well, because it takes time as well, right? But Jen, thank you so much, man. It's been great having you here for the open house. And I wish we could do a longer live, but I guess this is all we can do for now when it comes to financing side of things. But guys, if you have any questions, please do not hesitate to reach out to me. This is Raj here, or Jen. I mean, he's one of the best, most knowledgeable, and most reliable mortgage brokers that I know, that I've worked with in the last few years. So I would happily recommend anybody go work with Jen. I mean, there are a couple of others. I'll mention those guys in future videos too. This guy is one of my go-to guys for now and has been for the last little while. But Jen, thank you so much for coming in today.